Thinking about investing in raw land? Before putting your hard-earned money into a deal that everyone is telling you is a great deal, take a few minutes to watch this because it might just save you from making a big investment mistake. How do I know? Because I made that mistake when I first started investing in real estate over 25 years ago. So in this video, I'm going to walk you through the biggest risks most investors miss when buying land, and I'll share a personal story of what happened when I ignored those risks. And near the end, I'll share the single most important lesson I learned the hard way, something that can save you a lot of money, especially if you're feeling that rush to jump in. So let's start with the basics. What exactly is land investing? At its core, land investing means buying a piece of land with the intent to either hold it and sell it later for a profit or develop it into something more valuable. That land might be completely raw, meaning there's nothing on it, or lightly developed with things like roads or utility hookups already in place. The idea sounds simple. Buy low, hold until it appreciates, and sell high. But here's the reality. Making money with land is not as easy as it seems. There's no guarantee of profit, and in some cases, land can actually turn into a liability instead of an asset. And in a minute, I'll walk you through a personal story where I learned this lesson the hard way and why I would approach land investing completely differently if I had a chance to do it again. So why isn't land investing the easy win it's often made out to be? Because at the end of the day, you're gambling. You're betting the land will go up in value, but there's no guarantee. And unlike other real estate investments like rentals, land doesn't generate income while you wait. No rent, no cash flow. And in the meantime, the cost of holding the property keep adding up. These include mortgage payments, property taxes, insurance, and sometimes even maintenance. I learned this the hard way. Back in the early 2000s, I bought a piece of land in Florida for $125,000. The market was hot, and I thought it would be a quick win. Then the 2008 crash hit. The land dropped in value, not the 10 to 20% that I thought it would drop. It dropped a lot more than that. After the crash, something I bought for $125,000, I couldn't sell for more than $5,000. I ended up holding that piece of land for 13 years and eventually sold it for $60,000. But here's the problem. My mortgage was more than what I could sell it for. So to close the deal, I had to bring cash to the table. I had to actually pay out of pocket just to get rid of the property. What I thought was a home run ended up costing me. Not just in terms of what else I could have done with the money, but in real dollars I spent on mortgage interest, property taxes, and insurance for more than a decade of holding on to it. And that's the risk with land. You're not investing, you're speculating, you're gambling. And unless things go your way, it can become a long and painful lesson. And in just a moment, I'll share the real reason I bought that property, a reason most investors won't admit. So if you're still thinking about buying land, before you jump in, you're gonna wanna think through a few key risks. Now this isn't a full checklist. Every property is different, but these are the big ones that I think most investors either don't know about or they just ignore. And remember, even if you account for these risks, you're still betting on appreciation. So the first risk you're going to want to look at is water rights. This means, does the land have access to water? If the land doesn't have water access, it may be impossible to develop. That includes building homes, farming, or even building basic infrastructure. So always confirm that the land comes with clear water rights. Just imagine buying what you think is a great piece of land, only to find out that there's no access to water. So the land you bought, it practically has no value because it can't be developed. The second is road access. If the land doesn't have access to a public road, it's going to be really hard to develop it. So what are your options? You can negotiate access through someone else's land, or you can get the permits to build a private road. But that can take years, and who knows about the cost. So be sure to check that the land has legal access to a public road before you even consider making an offer. Next is zoning issues. Zoning laws determine what you can actually do with the land. If it's zoned for agriculture, but you want to build homes or use it for industrial purposes, you'll be in for a long, expensive rezoning process. And there's no guarantee that it'll work out. Check the zoning before you buy, or you might be stuck with land you can't use for what you had planned to do with it. Finally, here's one risk most people don't think about: liability risk. If someone trespasses on your land and gets injured, you could be legally responsible for medical bills or legal costs. This could turn into a serious liability, especially if the land is accessible to others, which it usually is. While this isn't an issue for every piece of land, it's something that can turn into a big financial risk for you if someone gets hurt. Now these are just a few of the risks that can turn something that you think is a great investment into a financial nightmare. In the beginning of the video, I mentioned that I would share the single most important lesson I learned about investing in land. And this is something I had to learn the hard way, and it was an expensive education. And that lesson is, don't let emotions, specifically FOMO or the fear of missing out, be the reason you invest in land. That's what got me back in the early 2000s, and I see the same exact thing playing out over and over again with investors chasing land deals. When everyone around you is talking about how great land investing is, it's so easy to get swept up in it. I get it. I heard the same hype and felt the same emotions of not wanting to miss the boat. I ignored the risks and I bought based on emotion, not due diligence. And ultimately, I paid the price. That emotional rush, that sense of urgency, is where a lot of bad decisions begin. I've seen investors fall into the same trap. That one land deal didn't just lose money, it cost me years of holding expenses, mental energy, and a massive opportunity cost. So if you're feeling that same pull, the rush to get in on a hot deal, just pause, take a breath, and go back to the fundamentals. It could save you from the same expensive education I paid for. So here's the takeaway. Land can be an interesting asset class, but it comes with more complexity and risks than most people realize. Before you invest, make sure you confirm water rights, check for legal road access, understand the zoning, and protect yourself from potential liability. And most of all, don't let hype or pressure push you into a decision. If you want to learn how to properly evaluate deals, mitigate risks, and make smart investment decisions, consider checking out our real estate investing course at semiretiredmd.com/real estate course. In the course, we'll walk you through how to evaluate deals, understand the numbers, and create a strategy that works, not just emotionally, but financially. Thanks for watching, and I'll see you in the next video.